The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as the dust settled on Friday's trade, the July WASDE report has arrived, and we got a few surprising numbers, including a corn number, U.S. ending stocks, both old and new crop lower than the trade expected, the wheat number higher. All in all, a mixed day in the row crops as we settled things up for the most part. Wheat under pressure. Good day in livestock. Let's talk about things. Joining us now for a conversation, Ted Seifert with Zaner Ag Hedge. Ted, welcome back to Market Talk, my friend. And you are the perfect person, I think, to have on this show today because we look at these WASDE numbers. These markets have been bearish. It's really been a supply-demand kind of back and forth, I feel like. So I guess let's just start with corn. Old crop and new crop ending stocks lower than expected. Caught a lot of people by surprise on Friday, Ted.
Yeah, I mean, the wheat report was pretty bearish, but the corn number was the big surprise. And it was a really bullish number, Jesse. Yeah. And I thank you for saying that I'm a good person to have on. I am a bit of a WASDE balance sheet nerd. So yeah, I have done the math. Okay. The reason why it was a surprise is because quarterly grain stocks numbers came in about 135 million bushels higher than expectations, which means most of us, all of us, were expecting old crop carryover to go higher and not go lower. But the USDA went the other way with that. And, first of all, quarterly grain stocks, that's analysts such as myself doing our best to guess what is out there, whether it's on-farm or off-farm stocks. And we do that by going back and looking at the disappearance during that quarter. Disappearance means demand. And we do that by looking at census data for exports, and we do that by looking at EIA data for ethanol grind. The one we don't know is feed and residual. Okay, so we make our best guess on that one. But, I was within a few million bushels of the average trade guess, and my math said that the trade guess is where our quarterly grain stocks should have been for corn. So the fact that it came in so much higher suggested to me that there was either more corn out there or that demand for that feed and residual category wasn't quite as robust year over year. Now, today you have the USDA something exactly opposite of that. Their main reason for lowering let's say exactly half the reason for lowering new crop carryover is because of exports. We have unshipped sales that are on the books. In fact, we've got a lot more than what we did at this time last year, to the tune of 203 million bushels. So there is a lot more sales on the books that could get shipped between now and the end of the marketing year. The USDA takes different approaches on this at different times. Sometimes they really focus on what has been shipped and the pace of export inspections. Other times they look at what has been sold and the potential for sales between the end of the marketing year. Obviously, one of those outlooks is generally more bullish than the other. They've chosen to take the much more bullish approach by looking at the sales that are on the books. I'm going to tell you, though, Jesse, that with the export shipments or the export inspections pace that we're on, I don't know how we hit that number between now and the end of August. I mean, we're talking a month and a half, and that's 203 million bushels higher year over year that we have to hit. So, okay, fine. But let's say all of those 203 million bushels of additional export demand, let's say that happens between now and the end of August. Okay, but the USDA is inferring that we're going to have quarter four overall demand at 3.1 billion bushels. That's 360 million bushels higher than it was last year. So the 203 million in outstanding sales, that's only a little more than half of it. There's another 157 million bushels that, okay, where's that coming from? Is it coming from feed? Do we have more animals out there than we know about? Are we feeding these animals to much higher weights on corn than we know about? And if that's the case, somebody should probably tell the cattle market because, I mean, cattle higher today as well. So I don't know. It screams residual category. And so that means one of two things, Jesse. That means either there will be a revision lower in last year's crop at some point, and the USDA will have to come back and say there was less on-farm storage than what they reported. Or, and I think a lot more likely, they're going to tell us eventually that, oh, some of those sales got canceled and or rolled into the next year, and the feed numbers weren't there, and they're going to end up back above that 2 billion bushel carryover mark and possibly like a 2.1. So I don't know. That remains to be seen. Now, I'm not, there's another analyst out there that call us USDA apologizers. I'm not really much of a conspiracy theorist, Jesse. I am often quoted as saying that these are the numbers that we have to trade. So you can argue with them. You can say they're incorrect. You can say that they're going to change in the future. But at least for today, these are the numbers that we're looking at. And so we're going to have to trade that. And honestly, I'm pretty happy about that. I think we could really use a recovery rally. I think we could use a chance to sell some of these on-farm old crop stocks that are a ticking time bomb. You know, those have to move before we start to harvest, or at least a vast majority of them do, because we got to free up room, and we're running out of time to do that. So if this offers producers a better chance at marketing, at selling some old crop cash, hey, I'm all for it. And it's also going to give us a chance to reset or set more hedges for new crop or make new crop sales. So it'd be great to see a 30, 40-cent rally. However, this report, in my opinion, should have been about a 20-cent higher report. It was, if you just look at the numbers, just based on it's a 10% miss, you know, over 200 million bushels in the new crop carryover. That's a 10% miss. We should have been up 10% today, and we weren't. So that's a problem, right? You know, so I think the market's already sort of saying, yeah, I don't know about that. But I'm hopeful that this is enough of a spark to give us a little bit of profit-taking, short covering, some follow through higher, and a chance to get some bushels sold at higher prices.
Well, and to that point, you kind of answered what my next question was going to be. I was going to say, you know, is this report do enough, especially on the corn side, to change this overall bearish conversation? But I think to that point, Ted, demand has been, you know, especially soybean demand has been tough. I mean, overall, it feels like that we have all this supply still and not enough demand. And until that changes, it just feels like these markets are stuck in this bearish trend right now on the grains.
Yeah, you know, and I just went through all the math for you. I mean, look, I know we don't all go deep in the woods like that, but you know, I'm basically telling you the math doesn't jive. So something's going to give at some point.
Yeah,
this is a much more friendly. Like I said, the new crop carryover came in 10% less than expectations. It's a very friendly number. But at the end of the day, it's still a 2 billion bushel carry, and that's if you believe that old crop ending stocks are going to be what the USDA reported today, and that's if you believe that the new crop demand that they have on the balance sheet, which I'd say is fairly robust, is actually going to be there. I think what you saw today is sort of a best case scenario for right now. So again, I'm hoping that it gives us some strength in the near term, but the longer term outlook, at least in my opinion, is still really rather bearish, Jesse. We're back to the cycle of oversupplying the market. You know, we're growing supply faster than we're growing demand, and that's a concern because that means we have to go through multiple years of low prices in order to really grow demand in earnest. And also, the market's going to try to cut out some of that production, whether it's from us or from South America. So, I mean, we're looking into a time frame which isn't as friendly, or really not a friendly scenario for producers compared to like what we have been. And that's the thing, we go through cycles, right? And we're coming off a really good cycle, a historically good cycle. We didn't set contract high prices, but we stayed up near them for a really long period of time. And unfortunately, that gets answered at some point with the opposite side when that pendulum swings the other way. And it seems like short of a very major and sort of unprecedented late season, for corn anyways, a late season growing weather problem, it just seems that you know, the bushels are going to be there this year, Jesse. And so we have to be really, really looking for these opportunities for marketing. I'd say even into 25 or beyond if you can. So while the numbers today were friendlier than expected, there's still it's still a 2 billion plus carryover. And again, I would say that's maybe our best case scenario for now.
We're talking with Ted Seifert from Zaner Ag Hedge here today on Market Talk. Ted, the wheat numbers, again, pretty bearish. globally. The Russian crop was left unchanged. I mean, you look at this wheat picture overall. That was kind of the other big story out of Friday's USDA reports. Your assessment of some of those wheat numbers?
Yep, the winter wheat crop came in higher than expectations. A friend of mine said, don't underestimate the wheat crop when you have halfway decent conditions." Apparently, yes. The world carryover it came in more than 6 million metric tons higher than expectations. That's a significant amount, Jesse, and it's not an overly bullish story. I mean, we've gone from domestic carryovers in the sixes, now in the sevens, and now we're looking into the mid to upper eights. 858, I think, million bushels was the projection that we saw today. This is not a friendly situation. Now, the only good thing you can say about wheat is that we've come so far off the highs at this point, and we've got layers of support underneath us, contract lows and all of that, that maybe we can continue to sort of base out here. And if we do get a little bit of strength in the corn in particular, maybe that would help the wheat. But this was not a friendly story for the wheat. And it's just not an overwhelmingly bullish outlook overall. It's probably less bullish than what we were talking about a couple months ago when private analysts were really cutting that Russian crop aggressively. Those same private analysts have been pushing it back up again. So I think it's justified for the USDA to leave that unchanged here today. Again, we have a lack of a really bullish story in wheat. And wheat just feels like at times recently where we've had kind of bullish stories, it just hasn't really responded, or at least not well, or if it does, it's very short-lived. So yeah, wheat's not going to be the savior for the grains complex. If anything, you look at the corn numbers, if you believe them, maybe it'll be corn. But it's also not going to be soybeans either, which I believe you're probably going to ask me about next.
I was just going to say, yeah, real quick. I mean, the soybean numbers were pretty much in line, but I mean, beans have lost over 50, 60 cents here in this week alone. I mean, this bean complex, I know funds have been going shorter and shorter as well in this soy complex along with corn. I mean, this soy complex just been hammered here, Ted, as of late.
Yeah, and I think you're going to get a lot more cash soybean sales happening sooner than later. There's this big inverse between the August and the November beans. The market has been asking for cash beans, and guys have been waiting, saying, we still have a weather market potentially coming up for beans. Beans are made in August, not July. And last few years we've rallied up to $13 to give us the opportunities to sell. But then, sort of the highlight of this week, aside from the USA report, is that the hurricane pushed through some of the drier areas and gave some good moisture. So now we have a little bit less optimism for a weather market for the month of August. You saw a pretty major capitulation in that inverse, in that August-November spread, especially on Friday, to the tune of about 10 cents. And that suggests that you're probably going to see some cash bean movement, and probably started here this week. You're also going to say that I think guys, based on the report that we saw and the prices that we have in old crop corn, guys are just disgusted with the price and don't want to have anything to do with it. Beans, at least on the board, still $11 or better. Well, that's a little bit more enticing to sell if you got to sell something, and we're getting to the time frame where things do have to move. So the pressure that we saw, especially on August beans here with that report, even a neutral to slightly friendly report, that's not a good sign. I don't like that. And then, you look at next year's balance sheet, and a 435 million bushel carryover is not as bearish as what some of us have been talking about. But you also look at the demand on that balance sheet, especially the export demand. And we just saw our first explicit sale of new crop beans to China, and it was barely anything at all. I think we have to be really worried about the demand for beans for next year. So it's really tough to get excited about soybean prices going higher unless we have a major weather issue in the month of August, which at the moment we're not seeing.
Ted, give us a minute on proteins. Bad start to the week, decent end of the week. Any thoughts for you there?
Yeah, it looked like we had the cattle complex wanting to roll over and finally have that bigger breakout to the downside that a lot of analysts have been calling for. And then we sort of saved it at the end of the week. We're getting into the summer doldrum time frame where demand kind of wanes a little bit because we've had our big summer parties, 4th of July or whatever. Now we kind of get a little tired, and then it gets a little sweltering outside, and demand drops off a little bit between now and the Labor Day holiday. But also, you've got some pretty major concerns popping up for the overall economy. So we are a little bit worried about demand. but the tight supply story, this has really never gone away, right? And so, I don't know, cattle, I think for good reason, have been very sideways. Again, it kind of felt and looked like we wanted to roll over to the downside earlier in the week, and then we saved it. We might be testing that out again pretty early next week. But at least for the moment, while I don't see sharply higher cattle prices, I don't really have the justification for that at the moment. It's also seeming to be trading around fair value. I mean, we're just kind of ping-ponging in August feeders between 255 and 265 seems to be fair value for now. And then hogs. Well, man, every time you think there's a contract low in hogs, then it shoots down, gaps lower, and puts a new low in, just like it did Wednesday. But then you have the big reversal higher on Thursday, and so maybe Jesse, we are trying to put in an exhaustion low here for the hogs, but man, I don't know. It's just yeah.
Exhaustion low is a good way to put it. Maybe we finally got to that point. Ted, great stuff as always. Folks want to reach out to you there with questions at Zaner Ag Hedge. How can they get in touch with you?
Absolutely. You can reach me directly at 312-277-0113. You can also find us on the web at www.zaner.com. And you can find me on the Twitters or the X's or whatever we're calling it nowadays. And I am at the Ted Spread.
Ted Seifert with Zaner Ag Hedge. Always good to talk with you, buddy. Thanks for joining us on Market Talk this week. Have a good one. We'll talk to you soon.
Thanks. You too, Jesse. Thanks for having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.